Today, I have two major updates on MSTY and ULTY. On MSTY, we're going to look at its price movement and the first distribution they're paying after reverse split. And second update, I'm going to show you new YieldMax strategy that they're implementing to stabilize ULTY price return. Those are the two major updates that I'm going to show you. So I hope you stick around and you watch this. First, we all know YieldMax announced a reverse split for a bunch of ETFs, and for MSTY, a reverse split took effect on Monday, December 8th. So it has been only 2 days, and the split was 1 to 5. So for each 5 shares of MSTY, you would get 1 share on price adjusted. So that means your share would have been lower shares, but your price would jump up. For ULTY, reverse split happened on Monday, December 1st. So it has been 1 week and a half. And that was 1 to 10. For people who don't know, reverse split happens whenever a share price of their security, either stock or ETF, go below requirement for either trading. So they have to hike the price in order for them to stay on the market. For whatever reason, there are so many reasons behind it, but all we know is YieldMax did reverse split for these ETFs. Now let's look at our first update. YieldMax MSTR option income strategy, MSTY. Price is 36.13. As you can see here, reverse split took effect on this day here. It jumped, and since then it just kept going down. So it hasn't stabilized. It just kept going down. Today it crashed about $1.17, and that's 3.24%. As long as the Bitcoin and MSTR keep going down, and of course MSTY will follow the suit, it will keep going down until those two assets stabilize. Today, YieldMax ETFs announced a distribution for Group 2. Group 2, of course, includes MSTY. Ex-date and record date December 11th, which is tomorrow, and payment date is December 12th, Friday. So you have to have owned these shares before December 11th, otherwise you are not going to receive distributions. And this is how much they pay for each ETFs. I'm going to scroll down and you can see how much they've paid. We are going to stop at MSTY and see how much they paid. They are going to pay 59 cents. That's 83%. This is the first time they are paying since reverse split. I'm going to show you how much they paid before reverse split. And 96% of that 59 cents will come from return of capital. This is distribution history for MSTY. Last week, they paid 14 cents. This was before reverse split. So we're going to monitor and see how this split will affect distribution and also share price. So in order for you not to miss any of the important update for ULTY, MSTY, or any other some ETFs you're investing your money, make sure you subscribe and share. And please smash the like button because that will help us a lot to grow our channel. MSTY net asset, as I've shown you last week, it kind of kept going down, and right now is at 1.89 billion. So this is another thing that I'm going to monitor to see how this split would affect a net asset of MSTY, because if MSTY has inflow, meaning people have confidence in this ETF, and of course if it has outflow, meaning people are selling and people are running away from it, that shows less confidence, and that will determine that you should invest in this ETF or you should stay away from it. Another weekly distribution announcement was for Group 1. Group 1 consists of fund of funds, and ex-date and record date is December 10th, and payment will be December 11th. And these are Group 1 ETFs: CHAPI, FEED, FIVI, GPTY, LIFG, QDTY, RDTY, SDTY, SALTY, ULTY, YMAX. As for ULTY, they are going to pay 55 cents, and that's about 71%. For return of capital was 100%, meaning 55 cents you're going to get, 100% of that came from return of capital. Here is ULTY distribution history. As you can see, the distribution they paid last week versus what they pay this week is a little bit lower. So Ultra Option Income Strategy ETF, ULTY, price is 40.11. This chart here shows you the price movement for ULTY since it was reverse splitted. So you can see when they did split up to now, it hasn't really gone down as it used to. So this can be a good indication that their strategy that they have implemented maybe is working, because since they split, prices stay relatively the same. Let me show you something here. If we extend 1 month, This is before reverse split. You can see it was going down, down. And December 1st, when the reverse split took effect, it was around 39.55, 39.56. That was the price. And since then, as you can see here, it kind of stabilized. It's almost flat. It has been between 39 to highest 40s, but it hasn't gone down below 39. So this is a really good sign for ULTY. So maybe YieldMax is telling us the truth, because they have said that they have changed their strategy for ULTY, and that will result in price stabilization. That means it's not going to lose as much. It's very early to make conclusion if this is going to work or not. We'll monitor this and see. And I'm going to show you what they say about that in a bit. But again, if you don't want to miss any of these updates, make sure you subscribe. And if you like this content, smash the like button. This was news release updated on December 8th, so about 2 days ago. And this is what they say. First thing here is ULTY overview and core purposes. So I'm not going to read this because I've made a lot of videos about ULTY, what it does. The thing that I'm going to read is a new information portfolio construction update. YieldMax is implementing refinement to ULTY equity portfolio. The new approach introduces a more balanced model that includes expanded exposure to underlying reference assets. Reference assets, as we know, they have between 15 to 30 underlying stocks. High volatility equities will continue to serve as the primary engine for generating options premiums engine. While past performance is not guarantee for future result, many of these names have historically produced attractive option premium levels, which are essential to elevated distribution levels. Large cap companies will also be added to seek to provide more NAV stability and create a more resilient long-term base. The enhanced structure seeks to balance options premium generation with a smoother investor experience. The fund's combined equity portfolio also aims to expand its investment across sectors, industries, and other asset classes where possible. So what we can get from this news article is that ULTY used to have very risky stocks and were dominant in this ETF. So what they're going to do is that they're going to keep the same volatility ETF for stocks, because those are very good to generate income. But what they're going to add is lower volatility, large cap stocks, and that will make this fund to be more stable. And on top of that, they are going to add a bunch of industries, because they focus on only certain sectors, but now they're going to expand it to different sectors, industries, and other asset classes. So YieldMax is doing all of this to try to balance ULTY and make sure it doesn't have that NAV erosion. So hopefully this will work. Will these changes that they're going to implement for ULTY work? That's to be seen. We'll monitor this and I'll keep you up to date. Thank you very much for watching. I'll catch you next video. Bye bye.